Hey everybody, this is Jim at SP500chart.com. It's about 15 minutes after 4 on February 5th, 2014. Let me read this to you, then we'll dive right in. www.sp500chart.com and this video are for educational purposes only. Nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I'm not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. Okay, we're going to start out looking at a daily chart because I want to point out this trend line once again that is a parallel to this resistance line up here. So we've got a resistance line that's got a number of touches on it, and then we've got this line down here that has 1, 2, and now we're just kind of teetering on top of that line. And what makes it interesting is there is an interpretation of this chart that I think you could make very easily, that we have a head and shoulders top with a very short right shoulder that should, if it does what they typically do, we should be looking at a target under 1700, and that could very well happen, but we are at least right now getting some support from this rising trend line. Now the reason I say that, well, other than the fact that it's true, the reason I mention that is there was a head and shoulders top back in actually in 2010, I believe it was, that looked to be almost picture perfect, and it didn't really play out. And the reason was simple. There was a support line that was stronger than what had built up inside of that topping pattern, and that support line won. Not saying that's going to happen here, but it can happen. Now, here's something we need to take a look at on, I think we probably get a good look at it on a 10-minute chart, and that is, we have been in a descending channel. Now, I mentioned yesterday that should the S&P get enough strength to get up into the 1770s, low 1770s, it should meet really, really strong resistance there. What looks like we're seeing right now over the past 2 days is a consolidation. We've really been in a pretty tight range, much like we were in a tight range back here from the 27th through the 31st. Now the question, of course, and it's always the question, is when you consolidate, you do it for one of two reasons. You either consolidate to reverse, or you consolidate to continue. This pattern right here was a continuation pattern. We were headed down, we went sideways, and then we headed down again. Now it looks like we're sort of going sideways again. I am still going to be using these parallel trend lines as the this top, and in particular as the signal that at least for now this leg down has lost steam and is potentially going to reverse. Right now we're still in the channel. So if we were to go up and tag this tomorrow, I would expect resistance. Okay? On the other hand, if this little pattern that's going sideways is a continuation, then we could come down and tag this line again. So with that in mind, let's just get some, normally I would call that a little inverted head and shoulders pattern, except for the fact that we've got this low over here that matches it. So this could be a little reversal setting up. and if it is, it would not be a tremendously huge reversal, I don't think. I think this could be the setup just to come up and test this resistance level up here around 1770, 1772, something like that. No guarantees that's going to happen, of course, and since we're still in this channel, I would certainly, if we do break out of this little pattern, I would not ascribe too much significance to that alone. To me, the S&P needs to get a meaningful move through this region right here where we really have 1, 2, 3, 4 now. I'm gonna enlarge this oval just a little bit. All of this area right here should be now considered resistance. And really, if you want to get really bearish about it, you've got your midline here in this diamond pattern that also should be resistance. So if the S&P can plow through this, I would be absolutely amazed. If it can do that, it can probably it'll probably get through this line here at 1808 as well. I'm just saying, this is we've seen some remarkable strength out of the markets, but really for all of 2014, it's been pretty darn weak, hadn't it? If you look at it, let me go to a 30-minute chart. Here we are in January. We really never made much of a new high by anything more than just a nickel or a dime, and then we've really been heading down pretty with a good bit of selling conviction, with the S&P having lost about 100 points. So for right now, I think the thing to watch is to see if this line can overcome what looks to be a significant amount of selling pressure that should have built up from what, for all practical purposes, looks to be sort of like a head and shoulders top. The thing to watch, I think, is this top channel line. If this breaks, then I believe we are looking at probably looking at a reversal, at least a short-term reversal, whenever this top line breaks. But if we just go sideways and hit it, then I would not be the least bit surprised if we see another leg down to come down and test our support line down here. But this is key. Let's see. Right now, this line appears to be giving some support. Our target, however, is underneath this line, and this is intermediate term resistance right here. So by the 12th, something will have given. We'll either be underneath this support line, or we'll be up above this resistance line, because this is where we intersect right here on Tuesday, or actually the morning of Wednesday of next week, I believe it is. So guys, there's your video. I mean, it wasn't a terrible day, but this is certainly nothing at all that you could say we're out of the woods. I would not think we start to see light at the end of the tunnel until we take out this resistance line right here. So, thanks for watching. Thanks again for your support.